Hi guys, and happy Independence Day to our Ugandan brothers and traders. Today we had a very interesting discussion back again with the geopolitics, significant impact in the market. We had Rufus explain to us why high yields on bonds can be quite detrimental to the economy. Of course, transitioning to whatever is happening in the Israeli-Hamas conflict, quite a significant impact on gold trading and oil traders. And obviously, what we see in terms of the US electioneering period, who is the anticipated speaker, and what might that mean for the markets, among other geopolitical factors that might be of interest to you as a trader and investor as we begin or continue with Q4. Tune in. I hope it can be educating and advantageous to your trading. Share your question, response, and remember to like and subscribe.
That's not the case, but I just like an iPhone.
All right, guys. I hope you're having a wonderful time. Maybe in the comment section you can add for our dear iOS users if they already have iPhone 15, yeah? Of course, I'm your host, Jesse. I'm joined by another guest, very enthusiastic listener of the podcast. And here's some questions, concerns, and obviously input for this show. Rufus, what's up?
What's up is Israel and Palestine.
Yeah.
Yeah, I think everyone is talking about it, so we're going to be touching on that today.
I think it's like the world has not enough wars and conflicts. You know, from just the other day we were talking about Niger.
Yes.
Niger is not really gone.
Yeah.
After that, Ukraine is still going.
Make noise.
Yes, make noise. You see? Yeah. So it seems like what is it? October is the Middle East month. Wow. We are going back to the Scandinavian Middle Europe thereabout.
Yeah.
And basically, when the war broke out, I think for me I was quite okay. Let's see how this goes. Maybe this is just a temporary. Remember the time when the General Soleimani of I think Iran was shot,
yes.
And then you thought, okay, this would escalate.
Yes.
And then now I was like, okay, now we are done with the NFP. It seems the NFP. You remember the tweet I said? I just want a very fruitful October, whereby gold goes maybe down to 1700, oil goes back to 100, and the Chelsea win. Very simple prayers.
Yeah.
I didn't anticipate it will have wars as
in between
as the stimulator, But it's actually sad, yeah? Yeah. Jackton, how are you?
Sad, is it?
Yeah,
okay,
it is.
From the market side, I'm good. How are you, Jesse?
Yeah, welcome to Bullish Banter.
It's such an honor.
Yes, have you been listening to it of late?
Yeah, of course, yeah.
Okay.
Definitely.
I know you are a podcaster in the
Very
making
much,
as well.
yeah. I like podcasts and all that. Bullish Banter is one of the podcasts I listen to.
A nice
while
one.
Coming home.
A nice one.
Yeah.
Now, on to whatever is happening in Israel. I believe in summary it is that it has been an ongoing conflict. Nobody really knows the solution because several administrations have tried to take it. But for us as market players, I remember you wrote something, Rufus, that in the markets there is usually, generally in life, there is usually bad news, and market players do take advantage of such issues.
Yes, markets are amoral.
Yes.
They don't have like a sense of morality. So for investors, if something is going good for a country, for a company, for an industry, we buy, ride the wave. If something is going bad, we short, enjoy the wave, but we don't participate in the violence. But we don't partake and we don't make things happen. But when they happen, we react to what's happening.
I think the most affected one is obviously the price of oil. For obvious reasons, it will be needed or their supply chains will be disrupted depending on how long this conflict and the impact it has on the people. But there is obviously that other flight to safety that is on gold. Now that today the markets are closed, perhaps do we expect this conflict that we have seen it reoccur many times? I don't know about you, Rufus. Do you expect it to be such a massive thing like the way Ukraine pushed oil to, I think it was $130 a barrel?
Well, from what we are seeing in the news, Israel has been in constant conflict with Palestine.
Yeah.
And they have had these instances where they have bombed the hell out of each other.
Yeah.
But then this is the highest, like the heaviest war we have seen between the two countries.
Okay.
So as a result of that, we have seen several developments. I think the announcement by Biden yesterday. Yesterday was on Sunday, the 8th of October.
Yeah.
This is when Biden announced he is supporting Israel, sent aircraft carriers, some fighter jets to Israel. Then we have seen more developments. Later this afternoon, we have seen that about 12 missiles were sent from Lebanon. So things are getting tough. Like more and more countries are joining both sides.
Yeah.
And this is becoming quite heightened in a way that for any investor, you would be very concerned. You'd be concerned that the area is getting completely destabilized, and this has a direct impact on the markets. So for me, the question is, as an investor who is trading in Kenya, Uganda, or the rest of East Africa, how are you prepared in terms of responding to how the markets might be affected?
Yeah.
How do you position your portfolio from this? Yeah.
Maybe, Jackton, are you a fan of, the spy movies?
Definitely, yeah.
Okay.
Yeah.
Now, based on what you are seeing happening, I don't know if you are a fundamentals trader or these ones are when you just get away from the market and protect your cash.
A mixture of both, actually. It's good, to have, both sides and also check on them, yeah.
Okay.
So on the fundamental, of course, it's sad what's happening to Israel. Yeah? Just being sarcastic, there's some people are benefiting out of this. There's some people who are like,
It's also sad what's happening to Palestine.
It's also sad what's happening to Palestine.
Yes.
Yeah, we have checked. It's around 2,000 people. Well,
Yes, around 2,000 humans have already died.
It's
in
very
both
sad,
sides
yeah.
of the war.
You see even so Elon Musk connects, just posting all those things and all that. So a mixture of both. Of course, we know the fundamentals, will definitely affect the commodities, especially if mentioned oil and all that. But it's also good we check the technical aspect, what the chart's saying and all that.
One thing I've learned about geopolitics and their impact on the market, I don't know about you, Rufus.
Yeah.
Whenever they start, I will pay attention fully
Yes.
to whatever is happening in that region.
Yeah. Definitely.
Every time we have seen something like this, from the years of Brexit, you remember they had like 3 prime ministers elected.
Yeah.
I just had BBC on high alert. That is the only thing, because I think fundamental will supersede all the technical analysis you'll make, because
most of the times,
the markets are irrational, players are amoral. So they are just 2 things. If they are a fund manager, they are trying to protect their investors' funds. If it's an individual trader, they are taking it like the Black Swan event. You want to make the killing Bobby Axelrod made on the billions, because I believe that is the origin of the show, unfortunately, due to the 9/11 issues. Yeah. So I would be looking at the moment, particularly whatever is happening in Israel, have all the sources, be it with the X now being the main stream source of news.
Yeah.
You might want to maybe put the notification bell on the particular handles or journalists who are covering the event. Now, that is just...
I think this is the first time that the world is getting to see both sides of the story.
Yeah.
So in a majority, I think all of the previous wars, they have been shaped to sound in a similar way because they have mostly been broadcasted by mainstream media, which is biased. But then, looking at citizen journalism and what's currently happening on X, you're able to see like people who are pro this, people who are pro this, people who are neutral, and get like 3 angles to the story, which basically gives you more information about what's happening.
It's an objective way of getting information right now, because I think even if you go to TikTok, those who are streaming live are giving you the real situation. They are not giving you intended something to trigger you to either castigate somebody or support somebody. You are getting it, absorbing it, and then making your own individual decision. Okay, maybe peace is the best solution for this, the obvious choice. But at what cost? Who will give up something for all that? In line with geopolitics,
I thought you're not on TikTok, Jesse.
Sorry?
I thought you're not on TikTok.
You know,
Shots fired.
Got you. Busted.
I have the app. I don't post a lot, but sometimes I do enjoy it. I mean, technology is quite interesting. You see, when an X transformed from Twitter, people are so gloom and dull about it. And right now, it has become all this super app that I think for me, it has just beautifully evolved
it's
into
insane,
something productive for
The
me.
algorithm is quite
So
remarkable.
for me, I'm referring to TikTok because people are able to stream live from war zones and everything, risk their lives and everything, just to update the world what is happening. So I think for an extended, clear vision of what is happening there, that's a good source, of course. So for me, like I was saying, in line with geopolitics, we know with the Israel-Hamas situation, we'll definitely keep an eye on it. Last week, we had a couple of news. I'm sure you have covered this, Rufus, from NFP to manufacturing data from the US, and of course, the shocking decline in oil of almost 10% within a week. Just after US Speaker House was voted out. And of course, we are getting into election period, plus almost the extension of the government shutdown, to say the least. And there is another one, Bank of Japan intervening in the markets. What is happening in the world?
Cracks everywhere.
Yeah, because from east to west, there is different things happening. I was saying, you see, China was on a 1 week holiday. Tourism is on another level. They have made almost $500 million in revenue from that golden week or everything. And then when you flip on the other side, the Western seaboard, America is basically eating itself from its side. As a trader, volatility is sort of reduced in the markets, but there are significant events happening that should trigger that. How are you aligning maybe your trades or positions at this time?
Personally, I'm looking at one key fundamental thing, and this is US interest rates.
Okay.
Currently, they are very high, really high, at 5.5%. So, looking at the next decision, a lot of traders I know are very focused on whether the Fed will go for another 25 basis point hike or whether they maintain at the current level of 5.5. But then the overall picture is getting forgotten in this story. The fact that we have 5.5 interest rates in the US, 10-year bonds yielding 4.7%, 1-year bonds of over 5%, it basically means that there is a lot of flow of money towards the US. So a lot of investors who are seeing risks happening in Europe, slowing manufacturing in Germany, I think it's currently getting worse and worse. The crisis of inflation in the UK. We are seeing the collapsing Japanese yen. That's why they are trying to support it. Now we can see what's happening in the Middle East, Israel, slowing Chinese economy. So it creates a very interesting opportunity, especially for the big money, pension funds, investment banks, to literally just park money in US bonds, knowing that the US will never default. I think we significantly covered this in the previous episode. So just looking at that, it's just giving you a clear-cut signal. The dollar is really strong, and it's going to be strong for the foreseeable period, as long as Jerome Powell maintains the same attitude of higher for longer interest rates. So for a trader, if you know that, then the next part is looking at what else you can trade against the dollar that would be sliding further away from the dollar. So if you identify a really weak asset and trade it against a strong dollar, then I think that makes more sense for me.
I don't know if you checked, there was a banking stock on Friday, which slid by almost 30%. So it seems the banking crisis is back again to wrap up the year. Very beautiful year packed with a lot of, macros running the market.
Yes, I remember seeing that.
I think we will have to wait and see maybe tomorrow when the markets really do open and everyone has digested whatever happens on NFP and everything. But I was quite worried because that came immediately after some reports on the UBS acquisition of Credit Suisse that created as well some issues in regards to maybe financial reporting. Meaning that as much as we might think the banking issue is sort of done and under the water, things are now sort of cool, the cracks keep on widening. So whatever ceiling they made to shut that issue down
Yeah.
is probably forcing itself out.
Sounds like music on the Titanic.
True. That you've mentioned the FOMC, of course, updating. I think it should be coming next month.
Yeah.
Most of the data which has been coming from US, even NFP itself,
Yes.
that came out, it was quite strong than anticipated. Yeah.
The non-farm payrolls were surprisingly good.
Yes.
But if you dig deeper into the numbers, you realize that they were not actually very good. The number of long-term or permanent workers, about 22K lost their jobs. And then the biggest increase in jobs basically came from people taking an extra part-time job, about 151K. So this basically means that, yes, if you take an extra job, it's taken in the statistics as if the economy has created one more job. But if it's the one person taking an extra job, tells you a lot more about the economy. If you have to take an extra job, basically means that personally you're not really doing well. So it might surprise you to see a bigger number on the non-farm payrolls.
Yeah.
But then when you dig deeper and realize it's people taking an extra job, then you know that the job market is basically softening.
Yeah, I saw that number. I think I was like, maybe they need to now first maybe siphon out or sieve out
Yeah.
duplicate job reporting so that it doesn't bring a bad picture to the markets.
Yeah.
Now, of course, that one strengthened the dollar, and we saw the gold continue to slide to the lower side besides what has happened over the weekend.
Yeah.
Do you think perhaps, if at all, the Israel-Hamas issue is not really important, we might see gold going back down to 1700s?
Hard call. So here's my theory and how I'm looking at the entire situation. Gold recently traded at, was it 2070? And then a couple of months down, we saw 1800. So with gold dropping that much within a short period, then the more an asset drops in value, the more interesting it becomes to investors. They start seeing it as cheap. The same case applies to oil.
Oiler.
Yeah. So we had a very good rally up to $95, and then a sudden drop last week.
82, yeah.
So when you see $82 and last week you had just seen 95, the further it falls, the more it becomes attractive to join in. So maybe you missed on the bull run, market drops, and now you think maybe there's still a chance because OPEC has not expanded output, and at the same time, global demand is kind of recovering. And now with threats on oil supply happening in Middle East, with a lot of pipelines passing around that area, then it becomes quite concerning. So the way I'm looking at gold going forward, I think looking at the better part of the year, where the Nasdaq made a record gain in H1 that it has never made before, S&P 500 also did well. The Dow Jones was the lagging index. So for those investors that made some good money on the ARA boom, including Q3, now they're thinking about their bonus check at the end of the year. So if you've made your money, you have hit your targets, and now you're looking at the charts, they're not indicative of further breaking higher than the previous high. So we might have as well hit the top. So for you to secure your bonus check at the end of the year, you might be considering something. Do you pack these profits into, let's say what? Do you pack the profits into a bond, let's say a 3-month treasury? Or do you put some of this money in gold? Do you put some of this money in oil?
Yeah.
So a lot of investors are considering that. And when I look at that situation, I don't think gold has a likelihood of going down to 1700. And even if it goes, then it would only bounce back stronger.
Okay.
Yeah.
Interesting. I remember when we were talking about bonds, the treasury bills, the 3 months, they were hovering between, I think, is it 16%, yeah?
Yes.
The 3 months bill, yeah?
Yeah.
And I think the long term, 2 years, 3 years, not 3 years, but rather 10 years, between 18 and 20%. That is in Kenya. In US, I think it's around 5.8. The other one is around 4 point something thereabout.
Yeah.
We are speaking about the significantly liquid fund managers.
Yeah.
I think those are the ones who are looking at it. Do you expect this year to have a very strong Santa rally based on whatever is happening, or maybe this time round we'll have maybe a flat Q4? At least on the stocks market and the indices.
I don't know how to explain it.
Because it has happened the last 5 years.
We have had it, but
Let's
last
say-
year it was not quite shouting that we are closing the year.
still happen.
So let's say you have this seasonal decision-making process where every December you go on a shopping spree and then you take your family on a nice holiday. But then here comes 2023. There's wide swings in the company where you work for. There's a lot of firing. The company is considering cutting salaries. Company is doing structural adjustments. You're not meeting your sales. Would you still consider going for that holiday and the shopping spree?
You only live once. Live it well.
So what I'm trying to explain is that the Santa rally is something seasonal.
Okay.
It's not fundamental. It's not fundamentals that push U.S. equities to make that rally during Christmas or around that period. Okay? So it's something that people kind of do over and over and it becomes a cycle.
Yeah.
But then, looking at the current fundamentals, let's say you are looking at a stock like NVIDIA, which has been the best performer in the market, up about 200%. Would you be taking your profit at 200% gain? Or would you be chasing that 205, 210%? Like the way I'm thinking about it, if people realize that this is the top, they start getting off and pushing their money elsewhere. So for me, I think Santari would be a moment where we see a lot of rotation in the market, maybe from AI boom to AI and tech to much more solid investments. Maybe we could be seeing the rally happening in the Dow Jones rather than the Nasdaq.
I would say the defense side, because I think even today morning, all the defense stocks from RTX to Raytheon to, of course, buyers. For those who do not trade in stocks, you might want to consider, at least based on what is happening in Israel. I think we have seen almost an average of between 1% to 3% gain today, yet it is a Columbus holiday. The reason I'm asking that is because you notice next year we are going into the US elections.
Man, yeah, true.
Which side are you on?
Republican. Team Trump.
Me, I'm on the side of Wall Street.
Oh, really?
So whoever is good for the market is good by me. I think what we have enjoyed under Biden is some stability and predictability in the markets. You can sleep without following the charts, knowing you made a very good bet. The other one, the
Trump is my president.
Right, that's Trump.
Like he's really strong leader.
Rational.
The markets trust him. Like if he said something was, it would follow. Then the other thing, the fact that there was no single war that happened during Trump's period, I think he gets my support. Not that I am voting in the US, but if he were to be president, I think I would be happier trading.
He also confidently said, like, if he was president, like the Russia-Ukraine thing couldn't have happened.
Yeah, that is a very big ifs.
Yeah.
So I will not. Politicians are generally the same across board. The only thing is maybe their mother tongue. That is the only difference. But in terms of their behavior, I will not put so much weight on them. The reason I'm saying so, of course,
true.
I don't think Trump himself, depending on how the cases go, he might or he might not be there. But of course, the candidates who come in, they have been saying a lot of stuff that might affect the markets. Of course, Biden, we know we will continue the socialist agenda of making sure that the social welfare is catered for. Maybe things like writing off the student debt, supporting Ukraine, obviously supporting, what is it, Israel against Palestine or whatever. Now, I saw a report, a very interesting report on X, whereby some members of parliament or Congress or Senate have started buying specific stock.
Yes, they're betting big.
Yeah, they're betting, and they are not getting in small. Over the last couple of days, we have seen some unique traders make some very interesting trades, and they're able to execute it. Do you pay attention to what the politicians do in regards to the market, or at least given we haven't had a stimulant? NFP these days is very mild in volatility. CPI these days is not really much market mover, but externalities, exogenous factors like Israel, of course, OPEC cutting production is more important. I don't know if how you are adjusting to this situation, Rufus.
Well, I've been following the story. Yesterday, I done a thread on some of the ways that the current war in Israel would impact the markets. And I mentioned that the way the Washington reacts will be quite important for any trader. So one of the reactions came from Biden. But then the deeper focus was on whether they are going to, let's say, vote for funding to, let's say, support Israel or whatever that happens. So that development has not been made yet as of today, right now. But then from the actions of Congress, you can tell if there was to be a vote where it would end up. So if these guys are basically buying war stocks, literally they bought companies such as General Dynamics, they bought oil companies, ExxonMobil, Chevron. There's a high likelihood that they would vote for a policy that basically serves their books. So if you're buying a stock right now, then you already know what you're going to vote for. So that's the bet that investors are taking right now. And I'm sure, or I'm very positive, that there's a high likelihood that once the stock market opens tomorrow after the holiday, there will be a big spike in defense stocks.
Yeah.
So we could be seeing some good rallies in Raytheon. We could be seeing some good rally in the Airbus and other...
And of course, Dow Jones as well.
Yeah, military companies, yes.
Yeah. It's very interesting when you are in the markets because as much as you're asking about it, it's sad that people are dying, but people are looking to invest. Even the decision makers themselves are deep in that murky waters of, yes, we need to address this, but also we need to make some money along the way. It's very interesting. Yeah. And I don't know how it will pan out. I think for me, like I said, I'll just be following these guys. I'm sure for those who do not follow either of us, you might want to follow because we retweet a lot about them in terms of how they affect the markets. Now, we have had a very, more or less, since the last time we had a conversation here, Rufus, a very modest Q3, where you are seeing gold trending steadily to the 1900s, things like Nasdaq just depreciating in price, let's say a price correction and everything. What is your expectation, at least on Q3 earnings that is starting, I believe it's not this week, next week?
Yes. For Q3 earnings, I expect this will be the first quarter in the year where we start seeing them really going down. I think the impact of high inflation was delayed, majorly because the average American had a lot of savings during COVID.
Yeah.
So a very popular index that tracks the savings of Americans, especially during the pandemic, has just recently shown that they have completely wiped out those savings. And now the impact of that, what we are seeing later in the news, is people taking on a second job rather than even that jobs, just to eke out a living within the US. So the fact that we are seeing this happening, it basically means that the consumer is weakening. So total credit card debt in the US recently hit $1 trillion. And then the debt that goes into default, basically leading to paying interest on your credit card, is also rising, basically meaning that the consumer is taking some hits. And as a result of that, we could also see the earnings of companies in this quarter starting to slow down. So right now, we're expecting Q3 for the year. So we could be seeing some impact of that in the numbers, especially for, I would say, discretionary goods. So people may not stop buying, let's say, milk or food, but then for things like luxury brands, things like vehicles or longer-term assets, we could be seeing them taking a hit.
Interesting that you've mentioned vehicles. There is an ongoing...
Come on, don't. I know where you're getting.
I don't know where
Moving on swiftly, Biden.
Bring it up.
There is actually not an interesting, but the ongoing strike, United Automotive Workers.
Yes.
I think they're on their week 4 now. And from what I heard on the acting Secretary of Labor, it's like they are talking, but the talking is just that. No idea if it is moving forward to a resolution or it is just, okay, good morning. How do you feel about this? I'm not happy. Okay, go and think about it. Tomorrow again, we go again. I think it will affect, of course, some of the manufacturing forward and the rest in terms of their performance.
Yeah.
And obviously, I don't know, given whatever is happening, we might see it even perhaps extend into late October if there is a no resolution, of course, which is also playing a big part in the production and obviously the sales numbers of these companies.
Yeah, there's also an issue of financing. So if, let's say, you want to buy a house, you want to buy a car, for the US economy, it's majorly debt serviced. So it's completely different from economies in the third world or frontier economies like Kenya, where whenever you are buying an asset, a majority of the people will be buying in cash. For them, it's mostly debt.
Credit
But then,
cards, mortgage.
Since the banks are stretched currently because yields have been rising, the value of bonds are lower, there's more and more people defaulting on real estate, then the banks are more reluctant to lend unless they are sure you will be able to pay. So looking at that dynamic and that now looking at automobile manufacturers, when they are looking to make their sales, they normally connect that with the credit of the client and then they find a financial. So in this case, if we are seeing prices of these products rising, mainly second-hand cars as well as new ones, then they are likely to take a hit from a weaker consumer and unwilling banks being able to lend to the consumer.
I have a question. I don't know if listeners, especially those who are new to trading, why is it bad when the yields are high? Maybe that would be a very important addition or clarity to traders. Why is it bad that when yields continue to go up, people start getting worried?
Let me try and explain it using an oversimplified example.
Yes.
Let's say a bond is going for 100 Kenya shillings. So this bond is yielding, let's say, 5.5%. Okay? An year ago from now, the same bond was yielding 1%. So it was basically making you 1 shilling, and now it's making you 5.5 shillings.
Yeah.
So if an investor is looking to sell their bond, we know that this bond is, let's say, 10-year bond, and it's yielding 1 shilling a year. So in 10 years, it would have brought you, 10 shillings, right?
Yeah.
So how do you convince an investor who is able to buy this other bond that is yielding 5.5 per year to leave that bond and buy the one that is yielding 1 per year? So you have to discount all the yields for that bond. So if that bond is giving you 1 shillings per year, for 10 years, that's 10 shillings, right? Yeah. This other one is yielding 5.5 shillings, right? So 5.5 times 10 is 55.
Yeah.
Meaning 55 minus 10 is 45, which means that this bond is supposed to be sold at 65 bob, so to accommodate for the other gain from the other bond. So if you sold me that bond for 65 bob, I would earn a similar amount if I basically invested with the one that is earning 5.5%.
Okay.
So the valuation of that bond has dropped from 100 to 65, or basically down 45%.
Okay.
Yeah. So in that case, in a case where you have rising bond yields, the bond values of earlier bonds tend to go down.
So it is basically unrealized loss for people who bought it while it was the yields were quite low and affordable. Now, does that make the currency weak or strong?
So in that case, for the person who had the bond at, let's say, at 1%, they don't want to sell at a loss. If they just hold the bond for the entire period, they will be repaid back the 100 plus the annual yield.
Yeah.
So in that case, they are incentivized to hold on to that bond rather than sell it in the secondary market because they would sell at a loss. Okay? Then, for you as an investor, you are incentivized to go for the 105.5 because you know that you are going to get higher yield. So as a result of that, you find that more and more investors are holding bonds, they are not selling, and newer investors are buying even more bonds, which basically drives the currency out of circulation, thereby strengthening the local currency.
Interesting. In summary, I guess that is what is happening in US. They are offering a lot of bonds for whatever reason, maybe budgetary support, military action, and the rest.
Yeah.
But the yields are not, they are attractive, but not enough to say dissuade people to sell either their current holdings
Yeah.
or buy new ones. So
Current holdings are massive holes, basically black holes. If those guys were forced to liquidate, they would completely go bankrupt.
yeah. I guess it's a very big carrot that is always going harper and harper.
Well, okay, it looked like a good decision then. During COVID, banks had a lot of cash due to the amount of money that was printed.
Yeah.
And also, people had a lot of deposits and savings in banks. So banks did not have anywhere to invest this money. If you invest in businesses, the businesses are not doing well because there are lockdowns and there was no deadline. People did not know when the lockdowns would be removed, when business would resume. So it only made sense to invest in these long-term bonds. So the only problem is the banks have tools to basically hedge against that risk. And their risk managers, I don't think they were very competitive. For the ones that did not hedge, they ended up going bankrupt. And others that did not go bankrupt are currently holding on massive holds. Yeah.
Interesting. Maybe you have something to add on that, Jector?
Wow, that's so intense.
You have been baptized by fire.
She'll get bonds, yeah?
You've been baptized by fire.
Okay.
Yeah. There are a lot of things happening. I know we cannot definitely cover all of them, but we'll try to update you at least for our listeners as we progress and see how the month or the year comes to an end. For me, I think two things that I'll be following closely, at least for the next couple of weeks. Of course, the Bank of Japan, to see what they will do to strengthen their currency. Very important for the stability, I think, of the yen, and even, of course, some trading opportunities there. Secondly, how the issue with Ukraine, Russia, plus now the continuing, let's say, conflict between Israel and Hamas. Very important to see if it will affect the supply chains of just not only commodities, energy sources, but also food supply. I think plays a big role in that. And of course, the US House election for the speaker, very important to see if they will affect the budgeting process of Biden, plus his, of course, policies in the
You've
coming
seen the
months.
two candidates, yeah?
Yes.
Yeah, the election is on Wednesday this week. Yeah. So it's likely to cause some volatility in the markets, especially based on the winning candidate's policies. So everyone is pro something. If the winning candidate is pro this policy, then that could affect a significant industry.
I think I was looking at Matt Gaetz, and he is very strict.
Yeah.
And like I said, it's an election year. So like politicians will always, first of all, advance their self-interest. So as a trader, you might want to find if that person aligns with your market interest in your words.
Definitely.
Yeah, because some of the policies are quite radical and they might just cause uncertainty in projection maybe in the coming months. Maybe your closing remarks, Jecton?
I mean, it's an interesting month, so much happening, I'm just curious about the, Bank of Japan governor.
Okay.
Kazuo Ueda.
Ueda.
I like his new name. Why do they always have to end with A? Like the previous one was Kuroda, yeah?
Yeah. Haruhiko.
Mitoma.
But they do select, let's say, qualified people. I mean, he has been in the policy.
Actually, I saw his interview on Bloomberg 3 months ago.
Yeah.
JP was there, Christine Lagarde, chief. Hey, that guy is educated. But there's one thing he mentioned, like, he's monitoring the situation about the Japanese young. Huh?
Yes.
So, yeah. So
I do not
they
like...
They said they're not like going to change anything.
Personally, I don't like the way Bank of Japan moves. They say they will announce interest rate at 3:55 a.m. in Kenyan time. So you are awake trying to wait for this guy to deliver the speeches. They do it at 8 a.m. So
Yes, it's
they are
usually tentative.
their rule is unorthodox, including their market operations. But obviously, we'll be monitoring to
You
see what
mentioned that
happens.
they're not likely to, like increase. It's going to remain the same
Yes.
unless something happens.
They have a focus. Their focus is majorly on wage growth. They want to see wage growth being sticky, like companies generally increasing wages across the economy. And once they have enough evidence of that, then they will consider starting to trim the QE. They have to trim the QE first before hiking interest rates.
But that's a bold move. Like you've just shown everybody are not going to hike the interest rate.
Yeah,
Fiscal year currency will be weak and all that.
They haven't hiked since what, 2016 or 2014?
27.
It's around either 2014 or 16. They maintained at negative 0.1 since then. Yeah, and that has been the basis of the JPY losing continuously against the dollar.
Okay.
Your closing remarks, Rufus?
For me, I'm pretty bullish. Bullish on Chelsea.
Come on. Just one win and
Yeah, I'm also very bullish on the dollar.
Okay.
So anything that seems weekly, kama ijakula vizuri, I short it against the dollar.
Interesting.
Dollar
As for
case.
myself, I would encourage for those who had some worries, concern about whatever is happening, feel free to always drop a comment below. We'll definitely look into it. We'll be monitoring heavily whatever is and how the developments proceed in terms of geopolitics and update you in person or even as a pod on the impacts it can have on your investments. I've been your host, Jesse. Have yourself a wonderful day ahead.